Hey traders, welcome back to this week's weekly Forex forecast. Over the last few weeks, we've been looking at the fact that euro dollar, and of course euro dollar just the inverse of the DXY, so the dollar index, we had this big run up and we started to get extremely overbought on a rolling weekly basis readings in the hedge dash sentiment gauges, and that was right here. And what I said to you at this time was in the weekly Forex forecast that we were now at a point where, even if this market attempts to push higher, it's going to be limited. It's going to struggle and it needs to pause or reverse on a rolling weekly basis. And you can see for the last 4 weeks, it has been doing that ever since we turned extremely overbought. So coming into this week, what we've seen is as we've started to see the dollar index itself bottom, and of course, again, that's being reflected here by a top in euro dollar. It's actually brought a little bit of a lack of volatility in Forex in general, because when the dollar kind of dries up in terms of volatility, you find that Forex markets overall start to lack a bit of volatility. And when the dollar starts to get very volatile, you start to see opportunities coming up in other Forex pairs as well. So we've been through this kind of 2 week period, in fact 3 to 4 week period, but certainly over the last 2 weeks, it's been quite subdued in Forex markets. But we've been through this period where the dollar has kind of been consolidating. It's been digesting this big move recently. And now it looks like we're starting to get to the point where the dollar is going to begin to move. And next week we have on Wednesday FOMC. So FOMC next Wednesday is likely going to dictate the next move in the dollar. And just bear in mind that FOMC we are expecting for the Federal Reserve to hold interest rates. Now, will we get a surprise cut? Because we did just see the first contraction in GDP since 2022. And bear in mind that, that's accounting really before we see the impact of the tariffs that have come in. So there's a decent chance, not guaranteed, but there's a good chance that we also get a second quarter of contraction in GDP in the US this quarter. So something to look out for. We could see the US slip into a technical recession. But for now, the dollar is likely going to make the next move based on what we see next week on FOMC. So just bear in mind the dollar pairs are not really likely to do much up until Wednesday, and then we'll probably start to get some directional moves on Wednesday. So what I'd like to see specifically in euro dollar, because we are already overbought on a rolling weekly basis still, I would like to see euro dollar pushing up into the 1.14372. So this becomes the sell zone between these two levels. And this is where we become overbought during the week, so intra-week. And of course, for those of you who follow the videos, this is exactly where I'm looking at taking these opportunities from in real time with GMT members every single day. And if we get into this sell zone before Wednesday, I'm going to be looking for a 1 or 2 day reversal back inside the range. That really is the opportunity, the only opportunity I'm really interested in euro dollar next week, because before FOMC, these markets, these dollar pairs should hold and really not do much, because then you start to see the directional moves coming on the event itself. So whenever you get a breach of these levels, and you could look at it the other way around as well, you could look at it if you breach and you enter the buy zone down below the 1.1150. But I would prefer to look for shorts because of the fact that we're already extremely overbought. So upside should be limited. So, if this kind of trade is wrong and you get involved in this and it doesn't work, the push against you should be limited compared to how it could snap to the downside, if we get the Federal Reserve holding rates next week and maybe saying something like they're going to hold rates for longer than expected, right? And we start to see strength of the dollar. So I would like to be in and out of euro dollar if I am going to trade it before Wednesday. You get a test on Monday and then you get the reversal leading into the interest rate decision. But aside from that, dollar pairs are not at the top of my list going into next week. And I do think there are much better opportunities next week in other Forex pairs outside of the US dollar pairs. And we're going to be looking at those in today's video. Okay, so moving on to the portfolio selection, and there's not a huge change in the data because actually the last few weeks have been quite slow, but we do have some changes, and certainly yesterday at the close of the week, we did start to see some volatility coming back into the Forex pairs to shake things up a little bit. So going into next week, I do favor Japanese yen shorts to the downside. I'm also going to be interested in New Zealand dollar shorts and CAD shorts. Those are my 3 favorite currencies to the downside. To the upside, it's a little bit less clear. I do like the Swiss franc as number 1 to the long side and the euro as number 2. Then we come to the pound, the Aussie and the dollar. Now, between those 3, we have an interest rate decision next Thursday out of the pound. And the Bank of England are expected to cut rates. So do I want to go into next week, with the pound as one of my long currencies if we're going to have an interest rate decision. So it would probably do nothing between, Monday and Thursday, and then maybe sell off, on an interest rate cut back end of the week, kind of Thursday. Not really, it's not ideal. US dollar, we could look at US dollar to the long side, especially if the Japanese yen is down to the bottom. This is kind of going to be supportive somewhat of the US dollar near term. So, US dollar CAD, New Zealand dollar, and US dollar yen, could look at those, but again, we'd be looking at those kind of with FOMC in mind. Now, the reason why I don't like the dollar trade as much going into FOMC next week is because, yes, it should be a long opportunity in the sense that it's starting to improve its quantitative performance metrics over here. And at the same time, we're expecting the FOMC to hold rates on Wednesday. But considering we just got a negative print in GDP, which it was expected to be positive and it came in negative, are we going to see now the following week a surprise interest rate cut? In other words, if you start to get involved, in the FOMC pairs beforehand, and we get that surprise cut, could end up with a significant weakening of the dollar and being on the wrong side of that. So that's why I don't really like either of those two setups. So going into this week, the Aussie is not an amazing long. I much prefer the franc and the euro pairs, but the Australian dollar will be on the basis of, even if it's just, relatively a better long versus some of these other currencies, that will be the third currency we're looking at. So going to be looking at franc yen to the upside, euro yen to the upside, and also Aussie yen to the upside. Going to be looking at New Zealand franc to the downside, euro New Zealand to the upside, and also Aussie New Zealand to the upside. I'm also going to be looking at today's video, top of my watch list going into next week is going to be CAD franc to the downside, EurCad to the upside, and I'm going to be looking for setups in Aussie CAD to the upside, given the opportunity next week. Okay, so kicking off the watch list as always with crude oil, and remember we're sitting underneath this big descending triangle breakout. Now I did cover this in more detail in the last 1 and 2, I think, weekly Forex Forecast videos. So maybe the last 3, I'm not too sure, but certainly the last 2. So if you want to know a bit more, you can go back and watch those. There's no point covering the same thing every single week, but we do have a downside target overall of a bigger descending triangle pattern, which sits roughly about 45. So any kind of pop higher in crude oil, I'm looking to short. In fact, we took out the weekly lower bound last week and we started to bounce a little bit, but this is not the market I'm looking to buy. So what I want to see coming into this week is I want to see crude oil pushing higher. I want to see strength coming into crude oil, and this is going to be where I'm going to start to look for potential shorts above the 62.57 if we can start to break into this. So we enter the sell zone next week between these two levels. And of course, once we're above the blue level, we're overbought during the week. And if we trade above the gold level, we're extremely overbought during the week. And of course, down here oversold, extremely oversold. But if I'm only looking to be short, this becomes a profit taking zone, and this becomes the opportunity to pull the trigger on a sell or a short opportunity. So above the 62.57 next week, I will be looking for potential shorts. And these highs right here sit very, very nicely in the first kind of quarter to fifth of this sell zone. So if we push through here, I'm going to be looking to the left-hand side, and I'm going to be looking for traders to attempt to break through these highs in the sell zone. And what I want to see is I want to see them fail. I want to see these buyers start to struggle. And as they start to struggle and momentum fades, this is going to develop a double top, head and shoulders. And that's where I'm going to be looking for them to pull their positions to liquidate back inside the range for a 1 or 2 day reversal. Again, these are the exact setups I'm looking at and putting out in real time and trading with GMT members throughout the week. So this is what I'm going to be looking for primarily. If we pull all the way back above the 66.76, I don't expect that to happen, but that would also be not just turning extremely overbought during the week, but it would also be a test of the underside of the 67.81 of the big descending triangle pattern. So above the 66.76, although I don't expect it to trade up here, and it's not likely that it will do that, but that is the second place. If we do trade above that level, I can pull the trigger on a short position, whether I'm already short or not. That becomes the second place I can do it. And the third and final thing is, you can see we're already trending down. We've pulled back to the moving average. You can look for the market to pull back towards the upper bound. And if you're watching this during the week, and I can either be short or do nothing, and it starts to pull back towards its upper bound, but it doesn't quite get there. You know, it starts to make its way up and it starts to struggle before taking it out, and you get that reversal back down below the moving average. The moving average follows it, you can look for that pullback into the moving average and sell off, and that sets up your bear flag setup for those of you who like Fibonacci and that kind of thing. Intra-week, usually you get one of those in the 4-hour chart per week. You know, doesn't have to happen every single week, but if you do get one, usually you get one of those within the 4-hour chart. And the profit taking zone, of course, would be down at the 54.18 for any intra-week shorts in crude oil. Okay, so kicking off the Forex universe with the Swiss franc pairs, starting with franc yen. Now, last week was so slow in Forex that I actually didn't take any trades at all in Forex. It was a profitable week with GMT members, but my profits were made in gold. I ended up buying gold and profiting from gold because the Forex markets themselves just weren't moving. I mean, basically nothing triggered in HedgeDash was just sitting there, and the Forex markets just did not move until Friday. You know, yesterday we started to get some movement back into Forex, which makes me think, especially with FOMC coming up, we're probably going to start to see that slow period of volatility kind of dissipating, but has been a very slow couple of weeks. So I think we're probably going to see that ending next week. What I'd like to see is, I'd like to see franc yen pulling back, entering the buy zone, because I can either be long or do nothing. I cannot sell this market. And once we enter the buy zone below the 17308, we become oversold during the week. There's a nice low here and here as well. And we even have a low down here. So how do you know which low it's going to fail at? Well, you don't necessarily know. This is where momentum comes in. This is where you start to drop down and assess, you know, are we starting to see sellers running out of steam? If we come down and we blast straight through this low and go to this low, then, you know, it's not that low, is it? You know, you're watching it and maybe you get a 5-minute candle straight through this low, you get momentum down, and then you hit this low and you start to fail. You start to see profit taking come in. And then you start to see more profit taking come in, and maybe, you know, form a head and shoulders, and then the sellers pull their positions and you get that liquidation back inside the range. And I'm usually looking to capture 1 or 2 days per asset. You know, if I'm trading an asset, I'm looking to capture 1 or 2 days out of it. So that's what I'm going to be looking for primarily going into next week. I can either be long or do nothing in this asset. If we end up below the 170.80, although this is unexpected and you're very rarely going to end up below or outside this gold range, but if you've got a catalyst like an interest rate decision or something like that, you can see these markets going above these levels. But otherwise, it's highly unlikely. So I don't expect it to trade below the 170.80, but if it does, that happens to be the second place I can pull the trigger on a long opportunity if I so wish. And the third and final thing, you've already seen this kind of breaking out. We may get the pullback and just stair step this, and you see the moving average again breaks below the moving average, and then you get the re-break. Moving average follows it, tucks into the moving average, but like over here, you break, pulls in, consolidates, and then you get the move away. So the bull flag setup in this case would be into the profit taking target of the 177.63. Next is New Zealand franc. I can either be short or do nothing. I cannot buy this market next week. So I want to see New Zealand franc coming all the way up, taking out the prior high, and also trading above the 0.49970. What I like about this is we're trading right into the prior low. So you get the big momentum break, pull back, and a retest. Broken support becomes resistance. And we also would be trading into the sell zone at that point. So this prior high and this prior low, you could kind of zone it off between here. Right in there sits the bottom of the sell zone. This is where I'm going to be looking next week for double top, head and shoulders pattern, looking for the liquidation to come back inside the range for 1 or 2 days. If this blasts all the way through, again, we're talking about a kind of plan B, a kind of unexpected scenario because it's not expected to happen. But if it does and it ends up above the 0.50812, if I want to, this becomes the second place I can look for a 1 or 2 day reversal. So we push above the blue level. Very often you get a 1 or 2 day reversal back inside the range. If it kind of holds and continues up, you get an even greater chance of a 1 or 2 day reversal back inside the gold range should you breach those, right? So you become extremely overbought during the week above that level. Hence why that becomes the second place I can pull the trigger. Because if I pull the trigger again here or here or here, all I'm really doing is I'm increasing the size of my first position. You know, the odds of a reversal haven't really changed until they get above the gold level, and then they increase, you know, substantially. Now, in reality, you know, the closer you get to the gold level, you know, the more likely you are to reverse, but that's a very clear-cut way of assessing, okay, I'm not just adding risk to an initial, you know, position, I'm essentially taking a second position as the probabilities have increased for a reversal. So for a cost average, you know, you can cost average from there, or you can just take an initial position from those levels. The third and final thing, of course, would be looking for the breakout during the week below the moving average. And here you kind of have this channel breakout at the same time. and the moving average follows it, and that can set up your Fibonacci opportunity or your bear flag trade if you want to trade those kind of setups into the 0.48286. And the final franc pair is CAD franc. That weaker crude oil price starting to catch up with the Canadian dollar now, so I can only be sure to do nothing. I cannot buy this market at all next week under any circumstances. So I want to see this market pushing through, and as soon as we trade into the sell zone above the 0.6055, I'm going to look to the left, and straight here is where we have the next high. So key area of resistance, this is the prior high where we pushed into and then reversed. So if we push into this again, this is going to set up a great opportunity to start to look for a 1 or 2 day reversal to the downside. So I would like to see us come up. This will kind of be, preferable. Do we get all the way back here? It's quite deep in the sell zone. Maybe not. So I'll be looking for 2 things. We trade above the blue level. Either this starts to fade, in and of itself, and it starts to form its own kind of resistance and trading into it, in which case I'll be looking for the 1 or 2 day reversal. Or it goes up with momentum, takes out this resistance, and then attempts, to break through here and starts to fail over here. So again, that comes down to the momentum in the market itself. If it blasts straight through in a straight line and just kind of consolidates sideways, I'd be looking for it to push into here. But if it pushes, attempts to sell off, pushes, and you start to see profit taking coming in, sells off, that's your sign. Okay, look, maybe once, twice we can add to this. And once we see those buyers pulling their positions, that's where we get paid for 1 or 2 days back inside the range. If we end up above the 0.61356, although I don't expect it to do that, it would be the second place I could pull the trigger on a short position if I wish. And the third thing is, as we start to make our way up, the moving average follows it here. And it's kind of like a dynamic trend line. We start to make our way up. We don't actually get to the upper bound because the market's too weak. You see the break back down below the moving average follows it, and that sets up a potential bear flag setup into the profit taking target to the downside at the 0.5894. Okay, moving on to the euro pairs, starting with euro yen. I can either be long or do nothing next week. I cannot short this market. What I really want to see is I want to see euro yen coming all the way down, taking out the prior low. We also have some nice lows down here as well, but breaching the 16173, this is the first place I would look. We have these prior lows right at top of the buy zone. Do we come down, test this, and hold these levels? If we do, I'm going to be looking for 1 or 2 day reversal. If we go straight through here and hit this level, then I'm looking down here. Are we going to fail at this low over here? So I'm going to be looking for double bottom, inverse head and shoulders, 1 or 2 day reversal back inside the range as always. If we end up below the 159.68, there's also a really nice low here and also here that can be used as confluence to time a reversal back inside the bigger range. But again, I don't anticipate it trading down below this level. It's more of a backup, more of a plan B. Most of the time, these markets are not going to hit these gold levels. So if we do trade below the 159.68, although it's unexpected, this is the second place I can pull the trigger on a long setup. And the third and final thing is that we're already we've got this breakout with momentum. We could see this market pushing up, trading below its moving average. The moving average kind of flat lines, and that's a sign that you're getting consolidation. The moving average goes up and it kind of moves sideways. That's a sign that you're getting consolidation. We're seeing that actually in a bigger way over here. We're going down and up, but we're actually kind of crisscrossing it. So you can also look for the rebreak above the moving average and also that bull flag setup into the 165.83. Next is Euro New Zealand. I can either be long or do nothing. I cannot sell this market next week. We're starting to kind of make our way lower. And what I like about this is we have multiple lows right at the buy zone next week. So I want to see this market come down, trade below the 1.8718. We become oversold during the week and we start to trade into these prior lows. This is where I'm going to be looking for a 1 or 2 day reversal back inside the range. If for whatever reason we end up below the 1.84406, although it's not expected, it is the second place I can look to pull the trigger on a long because we become extremely oversold down below that level. And the third and final thing is if you get the rebreak during the week, for those of you who like Fibonacci, you can look for the breakout. And again, this is kind of like a channel, just like a channel breakout. You can look for the pullback into the moving average and that bull flag setup into the 1.92740. Also a nice prior high right in the profit taking zone here. You could use to time any profit taking to the upside. And the final euro pair is EurCad. I can either be long or do nothing in this market. So what I want to see is I want to see EurCad continue down, take out these lows over here and potentially this low, but certainly these lows here, trading below the 1.54336. This is where I'm going to start to look to see if we can get those buy opportunities. Can we get an inverse head and shoulders, double bottom? If so, I'm looking for those sellers to liquidate their positions and for a 1 day reversal back inside the range. If we end up below the 1.5260, this is where we become extremely oversold during the week. So I can pull the trigger on a long position, whether I'm already long or not. And the third thing you can look for, again, for those of you who like to trade intra-week breakouts and Fibonacci and that kind of thing, again, the moving average is kind of just a dynamic, trend line. So you've got this kind of move down, you break back above the moving average. That's kind of your trend line breakout, and then as the moving average kind of turns higher, you see that kind of bull flag setup into the profit taking zone next week in EurCad at the 1.57790. Okay, so wrapping up the Forex universe with the Aussie pairs. They're not my favorite pairs. I do prefer the Swiss franc and the Euro pairs. However, these are viable opportunities and they are on my watch list next week. I will be looking for them. So I'd like to see an Aussie yen. I can either be a buyer or do nothing. I cannot short this market next week. So I want to see this market coming down, entering into the buy zone. And there's no real, prior low over here until kind of halfway down. So it's a little bit further than I would like. Usually I like it in the first half of the range. So what I'd probably be looking for here is I'd be looking for this market to come down. If it does take out this low, great. But if I start to see it lacking momentum before it gets there, forming its own reversal patterns, that's where I'm going to be looking from below the 91.64 for a 1 or 2 day reversal or liquidation back inside the range. If we end up below the 89.88, this is where we become extremely oversold during the week. So I get the second opportunity, if I wish, to pull the trigger on it. Now, what I like about this is there is a low, although I'm not expecting this to happen. I don't think this will happen. There is a nice low over here. So if we do come down here, it can be timed quite nicely with this low here, any reversal from down below this level, although I don't expect that to happen. And the third and final thing, of course, for those of you who like your Fibonacci's, you can look for it to come down, kind of consolidate, and then you get the re-breakout intra-week. You can look for the bull flag setup into, in this case, the profit taking target, the 95.18, and there is a nice prior high right here. Again, you can use to time any profit taking, any intra-week longs in Aussie yen. Next is Aussie New Zealand. So again, I can either be long this market or do nothing. I cannot short Aussie New Zealand next week. So with that said, I want to enter the buy zone in this pair next week. And if we do that, we have a nice low here, but this is a nicer one. The deeper we enter these kind of zones, the better really. So this is going to be a great low to start to look to time a potential reversal from. Looking for the market to fade, attempt to break through and stall out. And that 1 or 2 day reversal back inside the range is what I'll be looking for in this market. If we end up below the 1.06579, not only are we extremely oversold during the week, but we also run into a couple of nice areas of support. So this would also be a good place to time a reversal to the upside for 1 or 2 days from. However, I don't expect it to get there. It's kind of a plan B. And the third and final thing, you start to see the correction intra-week and you get the re-break. So it kind of pulls back towards its lower bound, but then turns and starts to push higher again. You can look for that bull flag setup into the profit taking zone in Aussie New Zealand next week, sitting at the 1.09206. And finally, we have Aussie CAD before moving on to gold and silver. Overall, you could probably, this is kind of a ranging market, you could probably short this or buy it. But for me personally, going into next week, I'm looking to the long side. So what I'd like to see is I'd like to see Aussie CAD come down, enter into the buy zone, which is below the 0.87943. And once we trade below here, we're already running straight into a number of prior lows. So you can see there's kind of a range forming at the buy zone. So if we do enter this, I'm going to look for sellers to try to drive price through these lows. And if I see them start to struggle doing that, that's where I'm going to take the other side of that bet, looking for that liquidation back inside the range. If we end up down below the 0.86940 next week, we become extremely oversold during the week. It is the second place I can pull the trigger on a potential long position, although I don't anticipate this market coming down to here. And the third and final thing, as always, is that you start to pull back towards the lower bound, and then you get the re-break, and in this case, it's kind of a range. It's a tight range here, so it'd almost be a range breakout of the top. Pull back, probably would retest these highs over here. You can look for that bull flag setup into the profit taking zone above the 0.89945. Not my favorite pair going into next week, I have to be honest, but it is viable. I will at least keep an eye on it. Okay, so wrapping up the video with gold and silver, and I do favor long positions only still in gold going into next week. Gold was actually a nice one last week. This was a setup I took in real time with members. We traded into the buy zone and we had a really nice reversal to the upside. We had about 1 to 2 days worth of volatility to the upside here, and then we kind of chopped around a bit, and then we finished the week closing, after the bounce. So gold was a nice one last week. I would like to buy gold once again, but I would like to see gold below the 3163.66. If gold does trade down below the 3163.66, just like last week, it becomes oversold during the week. This is where I'm going to start to drop down onto lower time frames and look for the double bottom, inverse head and shoulder, looking for a 1 or 2 day liquidation back inside the range. If we end up below the 3080.62, although I don't expect this to happen, this would be the second place I could pull the trigger on a long. And the third and final thing is perhaps on the unexpected rate cut next week, after FOMC, you get a breakout to the upside. You can look for the pullback. You can look for that bull flag setup into the profit taking zone next week at 3329.73. But next week, I can only be a buyer of gold. I do not want to short gold currently under any circumstances. And last but not least, we have silver. Now, silver, I would like to use once again in the opposite direction to gold. So I'm only looking for short opportunities in silver. I do not really want to buy silver. If silver pushes into its upper bound, then gold has probably also pushed into its upper bound. So I don't want to short gold. Out of the two of them, I'd rather short silver. So above the 33.13, I would be looking for potential shorts. There's a nice high here and also these highs here. These are the areas in the sell zone next week. I would be looking for buyers to start to stall out. And perhaps again, we get FOMC holding rates and we start to see the dollar strengthening. I would be looking for a 1 or 2 day liquidation back inside the range. If we end up above the 34.26, this is where we become extremely overbought. I don't expect this to be the case, but we do have FOMC. So, maybe we get an unexpected cut, the dollar really sells off, and you see silver post FOMC trading into its second upper bound. That is viable, because there's a catalyst there. But that would be the second place I could consider a potential short opportunity in silver. And the third and final thing is, if you start to pull back towards your upper bound, and then let's say we get FOMC, we get them holding rates and silver doesn't do too much. And then you get a strengthening of the dollar and it breaks down, especially post FOMC, you can look for the bear flag setup into the profit taking zone next week, which is the 30.87. So that is it from me for today, guys. As always, I hope you enjoyed today's video. And if you did, why not consider joining us in the GMT training room each day where I look at the best markets, as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge hedge-platform is included with every GMT membership.